Hello, everyone, and welcome back to the Cedi Investor. In today's episode, we are talking about 5 undervalued companies you should have in your portfolio at the moment. I'm going to give you my reasons why I think these companies are massively undervalued and why investors should be looking at them. We have a lot to discuss. Let's get into it. Starting off, we have Scancom PLC. This is one of the companies I believe is massively undervalued on the Ghana stock market. Now, let me give you my reasons for that. When we view MTN, a lot of investors, both institutional and retail investors, they see MTN as a telecommunication business and a mobile money business. And that is very true to an extent. But I view MTN as more than just a telecommunication business and a mobile money business. Yes, these are two of MTN's biggest revenue sources. But if you really research deeply into MTN, you realize that one of their biggest assets is their subscriber base, the amount of people MTN has on their platform. These people are essentially part of MTN's platform, and MTN is able to layer upon products such as what they did with mobile money. MTN started as a telecommunication business, and it was able to, create mobile money to layer upon a subscriber base. And I'm very confident that MTN will be able to find other products just like mobile money to layer upon their subscriber base to make more revenue. So I'm very, very bullish on this particular company. Apart from the subscriber base, which I believe is one of MTN's key assets, we all know they are dominant in the telecommunication space and the mobile money space. MTN literally owns more than 75% of the telecom space in Ghana. When it comes to data, they are there. There's not even a competition. They are a dominant moat when it comes to telecommunication and mobile money. And these are services that are growing consistently. I can bet you right now, tell me a company on the Ghana Stock Exchange that has grown year on year 30%. There is no other company doing it just like MTN. MTN has been able to keep its operating margins 50 plus percent for the past 5 years. They've done it during a somewhat bad macroeconomic condition in Ghana, during COVID period, during the whole debt restructuring. MTN has been able to navigate bad macroeconomic situations in Ghana and still consistently grow. Also, when you look at dividend payments, MTN has been very consistent with dividend payments. So if you're an investor who is focusing on dividends, MTN is one of the companies that consistently pays out dividends on the Ghana stock market. So looking at the business model of MTN, this is a company I can see growing consistently for the next 5 to 10 year period. But one thing that I would say is that when you look at the price of the company, definitely you are not buying it at a discounted value. The reason why I'm saying this company is undervalued is that when you look at its future expectations, how consistently the company is expected to grow, and how dominant the company has been in all its business model. MTN is a company I believe would give a lot of returns to investors. So yes, you are not buying the company at the cheapest of prices, but it's a company I believe will consistently be growing over the next few years, and that will definitely impact the price and returns of this particular company. For 2026, I expect sustained revenue growth driven by data demand, Momo expansion, and ongoing operational efficiencies. So I believe in 2026, the company is going to maintain its growth, and that's definitely going to impact the price of the company. However, like I wrote in my notes, there is some sort of uncertainty about the whole separation of the mobile money into a new FinCo. I think that presents some sort of concerns for investors as to how that whole thing is going to look like. So I'm going to even make a separate video discussing my thoughts on their own FinCo. But despite that, I still believe MTN has positioned itself for great return, and I believe it's going to be one of the companies to give investors a lot of returns over the next few years. Up next, another company I believe is undervalued is GCB Bank. GCB Bank is one of the biggest banks in Ghana. It is the oldest bank in Ghana. The company has done massively well this year, especially if you look at the stock price. It's up more than 100%. But despite that, I still believe the company is going to deliver strong returns in 2026. We are already seeing that despite how high the price is going up, it is being at least backed by the earnings of the company. The company is raking in one of the highest revenue you would see from banks this particular year. Its earning is top notch. They are just improving upon its earnings per share, and the deposit base is just increasing and increasing. Also, one thing I like about GCB is they've been very, very adaptable in this low interest environment, because one of my main concerns for banks was to try and diversify away from investment in securities, government securities to be specific, because we've seen it time and time again. If you are focusing just on the government securities, now trading between 10 to 13%, definitely your interest income will come down. So I really like what GCB did during this year. They were giving out, a lot of loans. I saw one of their adverts being like what, a 20% advanced loan for salary workers or something like that. I think that was very, very good. And also, they were focusing more on BOG bills. The rates on those umbo bills are substantially higher than that on government bills. So they were able to navigate such a low interest environment and still rake in a lot of money. For 2026, if the bank can sustain its current growth trajectory, the valuation could be significantly higher by year end. However, this outcome is not guaranteed and remains uncertain. Also, the NPL levels is one of the risks with banks. Starting from 2026, if a bank has an NPL above 10% and it continues into 2027, according to the BOG's new regulation, the bank will be prevented from paying dividends. So that's another thing you should note if you're an investor. Moving on, we have AngloGold Ashanti. And the main reason, my catalyst for this particular company, is rising gold prices supported by the strong demand on the global market and also their consistency in dividend payments. However, this company is one of the companies that's very, very illiquid on the Ghana stock market. So I say here, it is difficult to buy, and price appreciation may be non-existent regardless of the fundamentals. For most of investors, the value will mainly come from dividends and not capital gain. So if you're an investor and you're looking for capital appreciation, this is not a company you should most likely be looking at. First of all, it's going to even be very difficult to get this particular company. But if you're a dividend investor and you are able by some means to come across or get this particular company, it's one of the companies that consistently pay out dividends. And their dividends is one of the best on the market. Their dividend yield, even for the current price, is one of the best on the market. If you're a dividends investor and you want a consistent dividend payment, this is one of the companies, but most likely you will probably not even get it on the Ghana stock market. Up next, we have the insurance companies, to be specific, Enterprise Group, but I've also added SIC as well. Because when I look at the insurance sector, I believe it's one of the most undervalued markets on the Ghana stock market. There's still a lot of people in Ghana who don't even know about insurance. A lot of people don't even, you know, pay their insurance as well. So it's one of the most undervalued sector generally in the market, but it is growing each year. And I believe as the sector continues to grow in Ghana, there's a lot of money to be made by the insurance companies. And I believe two of the companies that are well positioned for that is Enterprise Group and SIC. However, I would say that I was a little bit disappointed with Enterprise Group over their past 2 quarters. I believe some of their underwriting was not as good as I would have liked. They also did a lot of reinsurance that I think was unnecessary or could have been way better than it was. So I was a little bit disappointed in them. But still, looking at the price the company is trading based on the valuation of this company, when you look at the free cash flow generation from these companies, like it's just totally massive. Honestly, very, very massive. And finally, we end off with the last undervalued company that I think you should invest in right now, and that is yourself. Just like what our dear friend said, the best investment you can make is in yourself. In a bullish market with fewer undervalued opportunities, the best edge you have is strengthening your earnings power by investing in your skills, investing in your career progression, or in your side ventures. You increase the capital you can deploy when better opportunities arise. So that's it for today's video. Let me know what your thoughts are. Do you agree with me or not? What companies do you think are massively undervalued on the market? I would really love to know. Thank you so much for watching. I really appreciate it if you like the video and also subscribe. Thank you so much. Until we meet again, have a lovely and blessed rest of your day. Peace.